Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for February 7th, 2017. Hey, we finally got those bulls to step up and take a push higher. It came late in the day. There was an early morning pop, and then we just really kind of died on the vine. If we take a look at an intraday chart here, we had that early morning move up, and then it just kind of really chopped around most of the day. It was right there at the end of the day. We got that nice push up. Those bulls step back in, giving us a very sweet relief rally. Now, as great as that is, there are troubles here that we need to pay attention to. First, let's keep in mind that we bounced very, very close to a price support right here. So this, what we've seen here is really not that big of a surprise. Bounced right near this price support, and we rallied right to this price resistance. Now, if we look at some moving averages on here, you can see that we're still below the 50-day moving average. That can easily be a very bearish signal. We call it a blue ice failure pattern, hit run candlesticks and right way options. And the blue ice failure pattern was actually coined the ice hole failure pattern. I know you can laugh at that. By a great trader by the name of David Elliott. David Elliott was a fantastic technical trader, and he coined this this term ice hole failure, where the market falls through. He used the 50-day moving average. He called that the blue ice, and you fall through the ice, you rally back up, trying to get back through that ice. The problem is the current is moving this way. And so you try to get back up there and end up bumping your head on the underneath side of the ice. You can't get back to the hole that you fell through, and then drowned going to the 200-day moving average. Now, I'm not going to suggest that that's what's going to occur here, but it is possible. And keep in mind, a true V bottom is very rare. Okay, so we could easily bounce around here, rest a little bit up here. If we can't get through that 50, be prepared for a retest of the lows. Okay, that is certainly possible. So don't just jump blindly into this market. Also keep in mind, I'm going to jump around here just a little bit this morning. Also keep in mind that the VIX, even though we had that really nice relief rally at the end of the day, the VIX really didn't come back all that much. We closed above 30 on the VIX. We still have tremendous volatility in this market, and we've seen it so far this morning. If you look at the futures market, in just 1 hour, we went from about 250 points down to almost flat. And as I record this, we are only down 30 points in the Dow, and we've been flipping back and forth. So keep in mind that we have some very fast price action that can still occur with the volatility that high. Now, when volatility is that strong, we can get a lot of false signals. And what I mean, we can get that big push that pushes us out, makes us think, oh my gosh, I'm missing out on this trade. We jump in, and that's right when it reverses. So fast price action can produce lots of head fakes, lots of false signals, and it can produce, obviously, a tremendous amount of emotion. And that emotion is what sucks us in. It gets us, oh, I'm missing out, or all those kind of emotions that crop up. So be very, very careful. If you do decide to trade, I suggest trading smaller than normal positions, because the volatility of this market can still produce extremely big whipsaws and very fast price reversals that can damage a trader pretty quickly if suddenly it decides to go the other direction. Again, we were down about 250 points just an hour ago, And it's not out of the question that we test that low yet today, okay, after the open. So be very, very careful. Let's take a quick look at the SPY. SPY, virtually the same thing. Let's keep in mind here, if we look at the moving averages, about the same situation. We tested this level of support right here. We rallied to this level of resistance. We're still below the 50-day moving average, and that could provide a point of resistance. If we take a look at the Qs, the Qs also rallied right back to a resistance level after testing this support. And once again, if we take a look here, we have a little bit better situation because we rallied back above. And the Qs have actually been one of the stronger indexes in this pullback, if you can call that stronger. But it is stronger, but please keep in mind we can still travel through the 50 and come back down through. So be careful here. Watch that. If we do get a pullback that holds a 50-day moving average and we start up from there, that could be a really good sign for the market, okay? So let's keep an eye on the Qs as maybe one of those stronger of the indexes. If we take a look at IWM, IWM already made that trip to the 200-day moving average. Just did it all at once, went down there, kissed it, rallied back up there to hold it. Let's keep in mind that we've rallied back to this resistance area. IWM's going to struggle right here for a while. There's significant price resistance in this area. And oftentimes IWM can be the leader showing us that we have trouble in the market. So let's watch this here. If we begin to fail here, we could have some trouble ahead. So let's watch it close. Prepare for very fast price action today, everyone. We're going to see big whips, lots of chop. So be really, really careful. If we take a look at our T2122, T2122 chart, you can see here we're down here still in the bearish reversal zone. Even without that, with that rally yesterday, we were way overbaked to the downside in the short term. So we're still in this bullish reversal zone, and we could see a rally back up off of that. But remember, we don't have to do that immediately. We can stay down in this lower zone for a while. Okay, we could bounce up, come right back down. So be really, really careful. Protect your capital, guys. Protect your capital. Let's go back. And let's keep in mind we have about 200 companies reporting earnings today. Lots of earnings reports. So we combine, a bunch of earnings reports with all the emotion that we have in the market right now, all that emotion, all of the drama, all of the volatility. Anything is possible. Anything is possible. So be very, very careful as you trade. On the economic calendar, it's kind of just a parade of Fed speakers today. First Fed speaker was this morning at 6 a.m. and we have another at 8:30, one at 11:15, one at 5:20 today. The only real major thing on the calendar today is this petroleum status report. Now, the last report showed we had a build in supplies. That doesn't help our oil stocks when we see that build in supply. Hopefully today we'll see that resume of the trend with a decline in those supplies. Otherwise, we could start seeing some real damage begin to develop in that oil sector, and that'll hurt the market as well. That'll make it difficult for the market to continue to move up. So be really cautious and careful. Watch your accounts carefully. If you do decide to trade, do it with a lot of discipline, a lot of willingness to set through some pullbacks, because we're going to see probably big swings. And be prepared for lots of false breakouts, lots of false signals, okay? So lean on your discipline, stick to your rules. All right, everyone, I want to wish you a fantastic day. I hope everyone does see some profit today and banks that profit. And be careful if you're new or inexperienced in trading. And folks, if this is the first time you've seen this, please do me a favor. Click that subscribe button. Smash those thumbs up buttons. I really appreciate that. And click the follow me button on Facebook. And by the way, always feel free to share this video with any friends and family that you feel might benefit from this information. Everyone, take care. I'll talk to you bright and early tomorrow morning.